Hi everyone, welcome back to Be Rich today, and I have Shashat with me from university. Happy Teachers Day to all of you again. In some shape or form, like I was saying, all of us are students and teachers. If not anything, we are students and teachers to ourselves. We try to learn from our mistakes and move forward in life. That being said, Shashwat and Anand had written a very interesting article in the Hindu, which was published a couple of days back, and I thought Shashwat can share his insights on that, and then we can discuss it further as we go along.
Yeah, thank you for having me back. And regarding the article, so the article which we wrote was published on Monday of this week, which is yesterday. And the article was on the topic of the trilemma or the impossible trinity, which is a concept in economics which says that one, you cannot have a country cannot have independent monetary policy at the same time as having a fixed exchange rate, at the same time as having free capital flow. So these three things cannot be there in an economy at the same time. You have to sacrifice one of them and pick either two. So that's what the impossible trinity says. So and it's quite the authenticity or veracity of this claim has been verified multiple times in the past, and we are seeing its manifestation today in the Indian economy, which is why uh, we wrote a piece on that. So what we're seeing with the Indian economy currently is that we have three objectives which Shaktikanta Das has to address. One, Shaktikanta Das wants a fixed exchange rate in the sense that he doesn't want the INR to depreciate against the USD. He wants to keep it pegged in a way. And this is something which he's been trying to do through many means. And he's used something called capital control or capital flow control. So, under capital flow control, what he's done is that he's raised the tax on outbound remittances from 5% to 20% on TDS. So, if you want to send, let's say, 100 rupees abroad, 20% of that will be taxed at source. So 20 rupees out of the 100 will be taken out and only will be returned to you after 18 months, depending on your income slab. So this is supposed to reduce the amount of outflow of currency into the market. So this is a strategy which Shaktikanta Das has employed. Another thing which has been employed is limiting laptop imports. So the first thing which the government did was to say, you know what, let's reduce our imports. What is one thing which we're importing, which we absolutely need? Laptops for our IT sector, and let's put an import ban on it. So it started off as an import ban, and that didn't fly with most of the consumers because they realized that they'd be killing the IT sector that way. So what they ended up doing was they psych pedaled back and said, let's let's make it a license-based import system instead of a outright ban, because India didn't have enough manufacturing capacity, and we had to have some sort of supply. And if the government decided to put an import ban, they'd be losing out on tariffs because you have black market and gray market imports. So for example, the Nintendo Switch, which isn't operating in India but is being imported through gray market means. And importing laptops would be a black market. And that is something which the government, I don't think, was ready to tackle with. And that is why they've pedaled back and they've said, okay, let's make it a license based import scheme where we provide licenses and we'll try to reduce the amount of supply of laptops into the country. That is something they've been trying. But I think all this will do is backfire and push up inflation because it's an inelastic product. Everyone needs laptops at some capacity, especially with ChatGPT and the growing tech sector in India. You definitely need laptops regardless of what you're doing. And I've seen this in my own college where just 10 years back, you could survive college without a laptop or any sort of computational means, just a calculator would do. But the way things are going in terms of academic assignments now is that there's a greater reliance on laptops than it has been in the past. And now, even certain schools have computer science classes and other ways of which they're encouraging students to get more tech friendly and utilize laptops. So, this is not something you can just do away with. It's like trying to do away with mobile phones. That's not something we can. So, that's exactly why even if you do limit supply, demand will remain the same because it's an inelastic good, and your price of the good will go up, and therefore your inflation will go up because of supply push means. And this is not something which they want. They want to tame inflation. They don't want to stoke inflation even more. So that's something which has been happening. And finally, what is going to happen is that they'll have to let the INR depreciate. So George Soros had a similar situation in the 1990s with the British pound, and what he did was he betted against the British pound because the British pound is artificially kept up. So he bet that the Central Bank of England could not keep up their currency or the pound value against the ERM for very much longer. And the ERM required you to have a very stable exchange rate. And so he bet against that, and he shorted the British pound, and he made a lot of money for it. And the INR is something of a similar situation because it's being artificially pulled up, especially because we're trying to have independent monetary policy. Independent monetary policy because we're not raising rates as fast as the US is. Because we're afraid of a recession and we think that the 2024 elections are going to come. So we'd rather not have a recession by the time the 2024 elections come around. That's why raising interest rates has been an unpopular policy in the RBI, and we haven't been raising interest rates. What raising interest rates will do is that it will provide a backlog to your, or rather, it will provide a back support to your rupee, because the more you raise rates, the less it's going to depreciate against the dollar. But because we haven't been raising rates enough, we had to engage in stuff like the laptop import ban or licensing system, and we had to engage in capital control. All of these things are symptoms of not letting the market do what it has to do, and that's what we're seeing. And regardless, Shaktikanta Das cannot keep this up for very much longer, and the interest rates do have to go up, or the rupee has to depreciate. Either one has to happen, and that's pretty much what the article talks about.
Yeah, you're right. And all of it is very clear. The reason why all this motivation right now for the RBI to function in the dysfunctional way is because of election cycle coming. And you can see that
Yeah.
even with the Adani issue, where the SEBI is unable to do anything because of political pressure and because of elections coming up. Till this election cycle is over, a lot of this is just hanging in the air and waiting
Yeah.
for some kind of issues to be settled in the elections. Of course,
It's
the
a house
public
of cards.
Indian public will go to vote, and we will decide whoever comes to power. It will go one way or the other. If the opposition comes to power, they'll want a clean house. So all these guys will be shaken. RBI will be shaken up, and a new RBI governor will probably come. Or even if this man is continuing, he'll be allowed to take some policy decisions which he's been finding very hard to take now. You'll suddenly see Shaktikanta Das take a U-turn and talk very differently once the political scenario is different. Same way, SEBI will suddenly harden up on Adani, and a whole lot of corporate house cleaning will happen if that comes to fruition. If that doesn't happen and the status quo continues, then what will happen is we will see change in policy from RBI. We'll see interest rates going up. We will see some kind of resolution with this Adani through SEBI. But that time the government will say, anyway, we have 4 years, 5 years to figure it out. People, Indian public will forget about this if we just let this mess fizzle out for the next couple of years, which they'll allow to happen. They'll take the steam out of this bag which they've been building up steam in, and it'll be misery for the Indian public for a few years. Then we'll forget about it and we'll move on to other issues. As always, we do in all countries. This happens. Political landscape keeps changing so rapidly and so fast that we can't have a attention span more than a few minutes nowadays. So either way, you see, this is going to resolve after the elections. But the point is, still that holding and waiting till the elections is causing significant damage to our economy, our labor force, our youth, and everybody. But there's no choice in the matter because it's the nature of the beast we live in right now. A dysfunctional democracy is at its best when it's like this.
I think the problem which our current prime minister and our cabinet is facing right now, or rather, I'd say the RBI governor actually is facing right now, is that he's being made to focus on all three aspects of your RBI trilemma. So the RBI is basically saying, or being made to say that, okay, you have to control the exchange rate, because if it slides too much, then it's negative press for my government, because I made fun of the previous government for having a depreciating rupee, and I can't have the same thing happen to me before elections. That's why they're trying so hard to keep the rupee afloat. That's one thing. The second thing is, okay, if that's not possible, then the consequence of that is that you have to have a recession. But that's not very popular either. And if you don't want a recession, the third aspect is you have to enforce capital control. But if you enforce capital control, you're anyway going to cause a recession. So this is sort of it's like you're asking Shaktikant. I mean, I sympathize with Shaktikanta Das here because
I do.
what is he expected to do? There's not
No, this
much he
is like
can do
this
here.
typically like, you know, when a VVIP gets admitted in the hospital, this whole family is there outside and they'll be telling the doctor what to do. The doctor will be like, dude, I'm an expert. I studied this. I've been practicing for 20 odd years. I have a team of experts. I have so many patients. Trust me what I'm doing. But the family is like, no, you make sure you do this for him, or you make sure you do that. And the doctor, his hands are tied because he's a VVIP and he has no option. You see this happening,
Yes.
and you're, as a layman, you look at it and go, this is crazy. You cannot be doing this. You have to allow the doctor to do what is required for the patient and pray to God that the patient pulls through. But there's a situation here. Shaktikant Das clearly knows what needs to be done. He's not, I keep telling this to everybody, that he is not a stupid person. He's a well educated, he's been with tremendous experience and background, he gets the job. You don't take someone with no background, no education, nobody, and make him the RBI governor. You may
Yeah.
make that, you may get an illiterate to be anything else in the government, but this job alone, it is of a certain caliber. Only you get to be this RBI governor. So that way, I'm sure Shakti Kanta Das knows, and true to himself, every day in the morning he gets up and he looks in the mirror in the room and he's like, oh my God, I'm going to do this today. Then he rolls out and he has to do this. He has no choice. And even Manmohan Singh under Narasimha Rao suffer these kinds of things. And Anand famously talks about that story of the delaying the release, and pulling it back by just waiting for 3 minutes and the governor telling Manmohan Singh, hey, it's already gone out. Then he says, don't worry about it. So these things do happen. There are political pressures. But that being said, what can we do? Well, as an investor, you can just play the waiting game, which the market is going to correct either way. That's for sure. Even if Congress on the opposition managed to squeeze out a victory, the market will correct. And even if the current ruling party comes back with a majority, the market will correct because there's only so much the dam can hold. And
Yes.
everybody knows, okay, we can hold the dam till this date, election date. They've decided that. So that has been set. So everybody's okay waiting. And all the market news is also like that. That's why the market is going sideways. It's not going up. It's not going down. It's not doing anything. It's just going sideways. And as an investor, I say it's a waiting game. I would suggest if you do have a lot of capital to deploy in the market, wait. Don't be in a rush to do anything. We really don't know what is going to happen. Even companies which you have been betting on and you see the intrinsic value is very good and all that, I would say still wait because you
The
really don't know.
um one route which we recommended or rather which we talked about, not recommended in the article, was that we talked about how there might be a case made to invest in pharma and IT companies because these are export based businesses, and the more the rupee depreciates, the better these companies tend to do. And there's also investing abroad in US dollars because as the rupee has to depreciate, no, regardless of what happens. And when the rupee does because I feel like a depreciation in the rupee is more digestible than a recession, and we're likely going to have both. So that being said, it's a depreciation in the rupee is something which you can benefit from by investing in the dollar. So this you're basically doing what Soros did in a less aggressive way. You're not leveraging yourself, but you're still betting against the rupee, which is something you can do by betting on the dollar. So that's something which maybe can be considered. Yeah.
Yeah, and that said, our audience primarily consists of two groups. We have one set of audience who watch our program, who follow us, who are outside India. For those guys, don't bring your whatever your earnings are into India in any rush unless you have to invest, like Shashwat said. If you're in the US or in Canada, if you're in Australia, look at investing there in those markets, especially the American market, like Shashwat said. Continue staying there. You don't need to rush into India with any investments of any sort. You can keep it there. Second class of people who watch our programs are people who are staying within India. And majority of these people are not high net worth individuals who are, very nascent and they don't have any prospect of going abroad right now. And if they don't have any prospect of growing abroad and they're going to be investing to stay in India at least for the foreseeable future, then, like Shastra said, I would not advise you to try to open an US trading account right now unless you're able to deploy funds of 8 lakhs and above. With the current thing of, for every dollar you send out, they're going to catch 20%. And there's a lot of confusion about that too. A lot of people are like, no, they're not going to catch unless you're over 7 lakhs. And no, then there's like no certain categories they're only going to catch. Then someone saying every category they're going to catch. And all this happens only after the 1st of October, which is next month. So, I would say just hang on there. Don't be in a rush to take your money and invest abroad right now, unless you already know I'm going to move abroad. My kids are already there. They're moving abroad. I'm going to eventually go settle with my children there. So that's an option. So you're doing that. Okay, go for it then. Or you're saying, okay, my kids are going to go study in America or they're going to study in Europe. Okay, then go ahead and start this and start hedging. Like Shashwat said, you'll make a good return against the rupee. Or you eventually you yourself through your IT job or whatever you're going to go abroad, then start moving your investments like that. Makes sense. But if you're, let's just say, a nascent investor and you just started investing and you're looking at, investing, I would still suggest that you stay the course, what we have always spoken. If you have a lot of capital, sit on it. Do small investing, sipping, like what Anand said, spending money, your different coffee money, as he famously says. Keep it at that
Yeah.
level. And don't, this is all great news, you know, in a macro level, Indian political level, just have a discussion. But as a investor, I would still say make sure you know your goals. Just based on opportunity and everything, you cannot do. Every opportunity doesn't have to be grabbed. There are going to be more opportunities to come. Don't worry that if you miss this opportunity of this, like me and Shashwat saying, the dam is holding and they're going to burst after the elections, and we don't know which way it's going to go. And you feel like you're going to miss an opportunity or not. There'll be many more opportunities to come. What's happening all over Europe, what's happening in the US is going to play out. What's happening in China has to yet to play out. So all these things are there on a macroeconomic level, which is going to definitely impact India. And I would say be inquisitive, read about it, learn about it, and like what Shashwat said, see how George Soros played it with England at the time, and keep your eye out, but don't make any knee-jerk reaction with any of this information. Is my advice. What do you say, Shashwat?
No, I agree. There's no room to be knee-jerk with investing, and there shouldn't be FOMO while investing. Although that's the natural state of mind, fear of missing out should not be something which influences your decisions. So I'd say take everything we say with a grain of salt, or rather, a big bag of salt.
Yeah, because I get a lot of messages from you guys on Instagram, like, Anand sir said about arbitrage, IDFC Bank. I don't think I missed that. So should I sell my Tata Steel shares in Tata Metal? You know, you're getting a lot of confusion there. You know, there are going to be opportunities. This is an opportunity. And anytime Anand says to buy something, it doesn't mean you have to go out and buy it. When he says it's the time if you want to book a profit, you can book profit. It doesn't mean you have to sell it. A lot of you are, constantly thinking, so he says, buy, should I buy? He said in this video, I should sell. Should I sell it right now? That means you're not doing your homework. You know, you need to do your foundations. You need to do your research. You need to see where you want to go. And if you don't do that, then you're going to have so much of anxiety every time you see a video come out from us or anybody else. And you'll be so easily influenced, which I don't want you guys to do. These videos
And
are just purely for information. It's just
yeah,
intellectual conversation. These are not
and just
something
uh, yeah. So and he never asks anyone to outright buy, or he never asks anyone to
correct.
sell. He just says this is something which is happening, and if you're
Mm,
interested, then look into it. That's he always says consideration. He always says consider it. This is some information which has come out.
correct. And I want all of our viewers to keep that in mind. This is just purely intellectual conversation on what we are thinking, what we are reading. We're offering you food for thought. But the thought has to be from you. You have to think, okay, this is what I want to do. And if you really are still very confused, I suggest you go back to basics. and read Anand's first two books and decide what is it that you want to do. Visit the drawing board and say, okay, where am I right now? Where do I want to go? What is my future in my job? How secure is my job? Take all those hard decisions and all those hard things you have to take a look at, because having anxiety is a symptom that you're not really thought about what you're doing, or you don't know what you're doing because you haven't thought about it. And out of the fear of missing out, or the fear of losing your job, or fear of not having money, you're rushing around trying to figure something out which you don't should do it in that kind of a frame of mind. That's my advice. I do hope you guys take that not with a pinch of salt, with a pound of flesh, or whatever you want to say. That you consume this part of the video is the most important part. For while me and Shashwat are repeatedly telling you guys, take your time when you're investing, do your research, spend time and think about it before you start moving stuff around and before you start doing anything. And do employ a financial advisor, someone who's qualified, you trust. Have a honest, frank discussion, like how you have a doctor. You do not see a YouTube video and start taking medicine. If you are, that's crazy.
Yeah.
Same way, should not be investing, seeing a YouTube video. You should talk to someone, put something down on paper, kind of get a roadmap, and then do it. That's the main reason why Anand also meets people. The reason why he does meet people and talk to people one on one is to offer this information. He never gives you this kind of advice on a video. He never tries to do this advice in a meeting. He says, let's meet one on one, because we need to know where you are, what you are doing, what the liabilities are, what's your prospect, where you want to go. Based on all those kind of touch points, then you can say, okay, maybe you should do this, maybe you should do that. Anyway, I think we kind of digressed a little bit off the article a little bit when we talked about investing and investors, Shashwat. I hope you didn't mind that I took this a little bit off course.
No, no, no. Of course not.
Okay. Anyway, it was nice catching up with you guys on Teachers' Day. Do go wish all your teachers and wish yourselves a happy Teachers' Day. And we'll see you on the next one.
Thank you.
Thank you.
After the event in Bangalore, my team has decided that we should visit my ex home, Saudi Arabia. We were there recently but visited only Dammam. The idea is to cover the other two major cities, Riyadh and Jeddah. On the 22nd of September, I'll be holding an event in Riyadh, and on 29th September, we will meet in Jeddah. Those who are desirous of meeting me both in Riyadh and Jeddah should contact the email ID given below and the WhatsApp number. My team would get back to you at the earliest. Once again, thank you for supporting Be Rich. It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written two books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.